Going into trading this week, investors are anticipating potential action by the European Central Bank and will look for signals for more stimulus from the Federal Reserve Board. In Japan, industrial output fell unexpectedly in June, which could give the Bank of Japan an incentive to further ease monetary policy. I'm Lindsay Bell, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the morning call. Late last week, we saw the market rally after Draghi spoke and gave us some good news that he's going to support the euro. But this week, we have more news coming out from here and over in Europe. What are the key themes you're going to be watching this week?
Well, I think for everyone, your theme must be know your time frame. How are you approaching the market? Are you approaching the market with a macro thesis, an intermediate thesis? Are you an active trader looking at levels? So for me, as an intermediate trader, I want to see if there's commitment to last week's move. I want to take a look at the chart of the S&P, take a look and see what levels of support should hold in order to keep the shorts trapped and the pent-up momentum involved. So if you go to the chart of the S&P, you will see, we've been following this ascending channel all the way from, the June lows. And last week, it was a little testy. We almost broke below. I know at this point, a lot of things look broken. I was thinking things were broken. I had like a net short thesis. And then all of a sudden, the ECB news came out, or Draghi's comments came out, and there was an igniting bar. We talk about never shorting an igniting bar, because what does an igniting bar do? It ignites a move. So anyway, at the end of Thursday, that's when we sent out a note saying IBD just went back into market uptrend. At this point, if we close near our highs, we've seen enough participation. Get more neutral. Cover some shorts, otherwise you're going to have a lot of things to think about. And then lo and behold, Friday, they really squeezed a lot of guys out of all their shorts. And and there was enough patterns out there to worthy of looking long. So now, if you look at the 5-minute chart for today, this is the levels that I'm going to look at to see that are buyable. This was the last little breakout move that you saw at around 2 o'clock, or actually this was 1 o'clock on Friday. So here's your 1376-ish. So I would say if 1375 to 1376 gets tested early morning, it's probably buyable. But again, you know the size of the move we've had in 2 days. So if you start too early, you might have to take a little bit of pain. I think this is support 1, and then support 2 comes right in here around 1365. So if we stay above both these levels in the next coming sessions, we could see a move, above Friday's high, well, into the 1400 area.
Yeah, that's interesting, the micro and macro levels that you just pointed out. Overall, if you take a look at the chart longer term, the S&P is only 2 to 3 points above its highs for the year, so it is still in an uptrend.
It's been in an uptrend, and even more ever since the lows back in 2008. And we've talked about the thesis of S&P 1700 by 2015, and the way these charts are shaping up, it could happen. So that's why on a macro level, you have to have a long-term equity plan, a plan that doesn't shake you up if we have down moves, a plan that if you see the headlines, you don't get too scared, and you stick to it on a monthly basis, whatever that is for you. And we can get into more specifics at another time there. But if you look at the chart of the S&P, you will see, this is your daily chart. If you go back to just say the weekly chart, okay, and we take a longer-term view here, if you look what's going on, this was the low that you had in 2008. Here's your higher low, okay, this was your first high, a higher high, another higher high. So I would say coming into the fall on a macro basis, if we take out the highs of the year, which we're about, like you said, 2% away, the next real resistance doesn't come into the double top that was put in, during the course of the last decade. So I truly think that we're going to take out this area at some point in the next 3 years. Obviously, there's going to be a lot of trades along the way, so you have to know your time frame. But as of now, I would say short term, really, really short term, you go back to your daily chart, because this is what I'm going to be looking at. If we stay above this, just say 1365 to try and, not make it too complicated, and you see commitment to this move here, we can continue, and then that's the way you trade. And there are a lot of stocks that are supporting it, and a lot of laggards that are having spirited moves off the lows.
Exactly. In the sector spotlight, we're going to get into the transports, because they showed a late week rally on Thursday and Friday on the back of Draghi's comments. But on Tuesday, UPS reported earnings that missed estimates. They lowered guidance. The stock got hit 5%. They said that they expected the U.S. to only grow 1% for this year. But the stock did regain some of that loss at the end of the week.
Well, that comes into your tactics. This stock has got battered and bruised, and a lot of the stocks coming into this earnings season were all battered and bruised. And a lot of them went up on lowered revenues for the second quarter and even a diminished guidance. So that just shows you the appetite. I know it's hard to sustain. There are a lot of naysayers out there, and every stock is not created equal. But if you look at this first chart of the transports, I know it's not leading, but it's still in this multi-month consolidation. Support's intact, resistance is intact, and this goes like a lot of these groups. That's why you're seeing such a extended rally in the markets, or it can't come down, is because these major names are still in the game. And if you look at, you said at UPS, now the earnings are behind it, and if you look at the huge move lower going into those statements, so at this particular point, you have some support to trade off of. This is now really big, the 72 to 73 area. I don't think you need to go out and chase this thing, but there are a lot of institutions that own it, and overall, they haven't been too crushed, considering it's right at the 200-day, and it's just going to need time. I don't think it's going to be so fast and furious, but this is the type of action you're getting in these laggard type names, where they're not killing them on bad earnings. They're saying, okay, we just priced it in, and now we'll give it some more time.
Right. FedEx, they reported earnings back in June, and they sort of said a similar thing, that the slowing economic environment is impacting them. They think the U.S. will do a little better with 2.2% growth this year, but the stock's been kind of stuck in a range since January. Is it going to be able to break out?
If it does, you're going to see a lot more upside in the transports and in the S&P. At this point, it's still holding higher, and on a multi-year basis, it's putting in a big base, like a lot of these things have done before major moves. If you take a quick look here at FedEx, you'll see, it's now back above all the moving averages. It held major support. If you take a look at the overall picture, this is also why a lot of these things are not falling apart, because they've been in these ranges for so long. Look at the size of this channel that's been put in, since early before 2010. And look where it is. It's with all this economic melees and the slowdown and everything that's going on, this stock is, not even, it's close to breaking out above this level. So imagine the economy gets a little bit better in the next, 3 to 9 months. This stock's going to break out above this, this is what, 95, 96, and you could see an extended move. So right now, it's like they're giving a lot of things a pass. And and with, I think, I don't even know what kind of dividend this has, but I'm sure it's pretty decent. So short term, 92 is your resistance, and then bigger is 96. And if a lot of these type of behemoth mega cap names start to go, you're going to see like Walmart-itis, where like Walmart just goes and everyone shorts the S&P. They don't know how we're going up, but these mega caps that are highly weighted, could keep these things going.
Right. CSX, you talk about ranges. CSX has been in its range for almost a year now. I think the major resistance on that one is at 23. So is that going to be able to break above that? Well,
I don't think I've traded this one in a long time, but as I looked at it, you brought it to my attention. This is a nice technical level. It could be good for my guys on the trading floor. If you look here, every time it's gone up to this 23, it's somewhat failed. And you had a strong day Friday. I don't know, it might need one more day, but overall, on a macro basis, we are seeing a lot of these lower tier groups start to break above mid-level resistance, and this is as defined could be. So at this particular point, I would watch this thing. It's holding a little bit higher. I would say taking a closer look. I don't know if it's going to wait for guys, but if it just stays above this 2230 area, it's above the moving averages, we can get a nice little cash flow trade through 23. Because if you're short this thing at 23, I know I would have to cover it, because I'd be like, wow, nothing's in its way now up to here, and then it can continue. So I'd keep this on the radar for a breakout above 23.
Union Pacific, another stock that's been on a tear lately. Actually, it's reaching new 52-week high, or near the 52-week high right now. It reported pretty good earnings over 2 weeks ago, so it's a more positive story.
Yeah, and this one, there's no bear market here. If you look at the chart is rewarding stock pickers. It's above all the moving averages. It's well above the 200-day. This support held in the late spring through the summer, and it's starting to get going. This is, again, the reason why this market doesn't go down, because you have names that I don't trade, and a lot of my guys would never even trade, that are on the midst of making new highs. So there are spots where you can make money, where you could hold and be a macro investor, besides just trading intermediate flows. And look at this move that this thing has had, and if you're an investor in this thing, you're making money, and you're making a lot more than keeping your cash in a savings account.
Absolutely. Well, we're going to take a quick commercial break, and we'll come right back and get into it with some earnings.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to t3live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.
Welcome back. We're going to talk about some of the stocks that are going to report earnings this week. We'll get started with some European banks. We have Deutsche Bank coming out tomorrow. Last week they pre-announced negatively, so the stock got hit then. It's been a pretty beat up stock in general, so I don't know what to expect. Can we start to stabilize since we've got the pre-announcement past us?
Well, they pre-announced, and that's when they got hit. And then ever since then, we've seen a decent bank rally here in the U.S. So yeah. I think some shorts got scared, and they think maybe it's all priced in. If you go look at the chart of DB, you'll see this thing has been annihilated ever since the highs back here in late March from 52 all the way down to where we hit. The low here was what, 28.66. So we've bounced off them. I think all they have to do is meet their pre-announcement. If they come out and miss what they pre-announced, you could retest this area, but if they come in line with what they said it'll be, or maybe a tiny bit above, there's real, this thing can get back into this last area here between 34 and 36. So if you're short this thing, hopefully you covered already, you made nice money. If you're long it, just know you have a long-term thesis, and you must really love this name, because any bank that you're long, you need to do your homework and love that name, because these banks, are very complicated. And for me,
right.
It's hard enough to look into the U.S. banks, let alone the foreign banks. But chart-wise, it looks like cover your shorts, and if you're going to be long, make sure it's just a tier 1 at best.
UBS is another one going to report earnings tomorrow. That stock's been pretty weak. Last week it took out lows, so it's another one. You probably would give the same advice for.
Yeah, and this one actually broke below major support, got everyone out, and then came back above. So that's like a little bit of like a trap play, where they stop everyone out, they get some extra people short on bad news or perceived bad news, and then it comes back above, and then no one understands why, why is it going up? If you look here at the chart, you will see it broke below this major support. The major support here was in the 10 area, broke below. And look how quickly that comes back, because when you get a move like that, which is kind of like how a red dog reversal works, a lot of people get stopped out at the level. And here it's almost like a little bit of an island bottom, because you gap down, gapped up, but this is a foreign stock, so I can't say that. And it's right back into this area. It just had somewhat of its oversold bounce, so it's going to need to have an inline report for it to be sustained. I would say wait till the numbers come out before you start diving in and guessing direction here.
Now we've seen some of the laggard banks here in the U.S. move off their lows. Goldman Sachs and JP Morgan. Goldman just powering through last week.
Yeah, Goldman Sachs held support again. We've been talking 90, 50, 91, big support. Came down there, after earnings. Because if you remember, when earnings came out on Goldman, it tried to break above 98.5, 99, couldn't sustain it, came back into this lower channel. If you look at the chart, it just shows you how it likes to confuse everyone. This was earnings day, and it sold above this level, came all the way in. But look at this nice reversal bar right at support. And since then, look at this move, pow, extending, really squeezing guys, that stayed short thinking that it has to break below it. And I was in the camp saying too, chart looks bad. If we're going to break, Goldman's going to lead us lower, but we didn't break, so money came back. And at this point, next real resistance is around 104.47, and then maybe even into 110. I know I tried to short this a little bit, on Friday, and I just stopped myself out. It didn't work. Tactically, would you rather short into this area versus be long? Yes, but Goldman Sachs definitely takes people for a loop. And if you look at JP Morgan, we've talked about getting in a tier 1 long position after the big news that came out. If you weren't involved, here was your tier 1, and everyone wants to know about the tier system. So here's tier 2. Okay, if you're in tier 1 into this lower level pennant, once it started to break above, that's your tier 2 for cash flow. You could have maybe sold on the close and stayed with it and made some cash flow. And now I would say as long as it holds above or tries to stay above the 200-day, like 36, 36.40, you're going to see more of a gap fill. And the gap gets filled here on JP Morgan all the way up to $40. So we'll see what big percentage of this gap gets filled, and that'll also give us clues to future direction. But right now we're in there. Let's see if we could stay above this 36 for some more action to the upside.
BP is going to report earnings tomorrow also. I think people are kind of bullish going into this report. The stock sort of bottomed late May, early June. People think revenues are going to be strong given the higher fuel prices in the upstream business and the downstream business. Higher crack spreads are supposed to help operating margins. But the stock, like I said, has been running up into earnings.
Yeah, this one I wouldn't say is priced like it's going to have a massive report, but it's also not looking at a disappointment. It's off the lows. It's been following this trend. If you take a look here at the chart, you'll see this was the low for BP. It's been, this was your gradual uptrend, which obviously it's not near, and then it started to even accelerate a little bit. It's coming into that resistance around 42. So I think if you're an investor and you're in BP, I think you'd stay with it. As a trader, it's not that compelling to me, but if it gets above this pivot right here of 42 bucks and stays above it, your next real area doesn't come into about 43.5.
MasterCard's going to report earnings on Wednesday. We saw Visa come out last week. They beat expectations. We're wondering if MasterCard's going to be able to do the same. What key levels of resistance should we watch in this stock?
Well, if you first take a quick look at Visa, that's because the earnings are behind them.
Right.
I remember earnings came out, it was up $1, went up 3, and it held. And it didn't have a powerful move because the market also was a little bit in flux. If you look at Visa, you'll see that it's right back near these highs here. This was that news of that settlement, and it couldn't get any traction, and then pow, and now we're coming right back up. So Visa has also proved to be a macro investment that has been doing very, very well, that's followed most of the macro rules. And now MasterCard, there's always a little bit more risk when a company's coming out and putting out earnings. So you have to know if you're a long-term holder in MasterCard and that's what you've been doing, you probably stay with it. But as a trader, I'll wait till after the report. If you look here, 440 is a really big level, and then you have the highs here at 466. So, for me, I'm not going to have any position going in on MasterCard. If you're an investor, stay with it. Maybe have some kind of hedge strategy. But overall, same way, we did with Amazon, with Google, with a lot of these things. We know our levels beforehand, watch the earnings, and then trade them after. But MasterCard's in the game for higher prices.
General Motors is going to report this week. Also, we heard last night that they ousted their chief marketing officer, who was a key integral player in the restructuring there. There was something about he didn't vet a soccer sponsorship. I don't know. But the stock has been pretty weak. It took out lows last week.
Right. So this is priced for death. So at this point, anything that shows any glimmer, I would think shorts would get squeezed. And I know the administration has a very big vested interest in this because they've touted the fact of how many jobs they've saved, and they've saved the U.S. auto industry. But if you look at what they really did, they wasted a lot of money. I hate to say it that way. If you look at the chart here, this is when it was the new issue came back out. They quickly had enough wherewithal to push it to the highs, and then ever since then, it's just been coming into the lows. It's at 1967. I guess short term, if you take a look at the chart, you will see that there is a downtrend here. Actually, let's take that reversal out of the way because it broke out and failed. I talk to you guys about breakout failures all the time. Tried to break above, failed. That's a sell signal right there. And then when it broke this support, another sell signal. So it could have gotten you out of the way of what has been a very long down move. So here we are again at these levels. If the numbers, I guess, are even in line and it could start to get above 20 and hold above 20, perhaps we get a laggard trade like we've seen in this market. There's been a lot of them. And next really big resistance comes in around 23. I want to take a quick look at Ford just while we're here. Wow. I remember trying to play this in this range. Just goes to show you also. I remember the big car sales numbers were coming out, tried to break out, didn't. Here was your exit when it hovered at the low end of this channel. It broke below this 11 1/4, and since come all the way into 9. So I think there's value in Ford actually. But they have to get away from all those headlines. I think they've had some recalls on 1 or 2 of their vehicles. But overall, I think out of the 2 of them, I'd rather see you go with Ford than GM.
Okay, let's do some quick hits real fast. Lululemon, it changed composure around July 18th. I know you were trading this one last week. How are you trading it this week?
Well, if you look at the breakout failure on Lulu, these are quick hits. I'm going to keep it quick. That was your way out. So let's just go to the chart. Here's a breakout failure. This is when it changed composure. Right in here, I think Thursday when we talk about switching gears, that's when I started to get long, saying we have a nice lower level pivot. It's holding higher. So I took it long on this day, closed near the high of the day. And then on the close Friday, I sold more than half because it was a nice 2-day trade, and now I'm going to trail some as long as it could stay above, just say 60 and a quarter. I think we can get continuation to 65, but we'll see what happens. And what was 61.98 is that pivot to see if it can go through.
How about Amazon? Big move on Friday after earnings. Can this one continue to move higher? Should we look for it?
Well, this is a great example on you don't need to take the risk into earnings. Okay, Amazon came out. A lot of people thought that they missed. I thought it was not a great report. The guidance wasn't great, but the price action spoke for itself. Price point sheet so many times off the chart. We talked about 230, 230, 230. That's the level. You don't need to own it before. If it gets above it and stays above it, that's all you have to know. And if you look here on Amazon, this is the reason why we had that level. Okay, this is 229.38. Here's 230. This is the recent peak around 233 from the last earnings. And it was down after hours, so you didn't have to be into it. It started to go positive. I know Mark Sperling was trading it very well. He started buying it in here, got above 230 Friday, closed really strong. Really nice trade. And now if you look at the overall chart of it, now that these earnings are out of the way, we're a stone throw away from 246.60. So this is one of those stocks you should stay with until the end of the year. It broke above this pattern. Earnings are out of the way. And if they could do that on bad earnings, imagine what happens if some of these fulfillment centers start actually cashing in and their margins continue to get better.
Exactly. Well, that's all the time we have today, but those are the stocks and sectors that we're looking at, and be sure to check in at the end of the day for the daily recap.